What if Velvet is falling into a dangerous short-term setup? Sell signals are starting to appear, and yet the market is still calling Velvet undervalued. Is this a genuine opportunity before another move higher, or could traders be walking straight into a value trap? Velvet, trading under the ticker VELVET, is one of those crypto projects that has suddenly attracted much more attention because of its combination of DeFi, AI powered trading infrastructure, social trading, and cross chain functionality. Velvet describes itself as a DeFi operating system for on chain trading, and recent development has included Velvet 1, an AI model focused on on chain intelligence, autonomous strategies, cross chain trading, and expansion into global markets. And that is exactly why Velvet is interesting right now. The story sounds much bigger than simply another small cap crypto token. But the question is whether the token price can actually justify that story. Before we go deeper, make sure you like this video, subscribe to the channel, and most importantly, leave a comment below. I want to know your opinion on Velvet. Is Velvet genuinely undervalued, or is the recent attention creating a dangerous trap for late buyers? Now let's talk about the price action. Velvet has recently shown extreme volatility. Historical data from August shows just how quickly this token can move. On August 11th, Velvet jumped more than 40% in a single day, followed by another strong advance on August 12th. That kind of move can create enormous momentum, but it can also create enormous risk because traders who enter after a large pump may be buying directly into profit taking. More recently, market reports highlighted another major surge driven by aggressive derivatives positioning and a short squeeze style move. That is important because a price increase caused heavily by leveraged positions can look extremely bullish while actually making the market more fragile. If those leveraged traders start closing positions, the same mechanism that pushed the price higher can accelerate a decline. So when we look at the technical picture, the first thing to understand is that Velvet is not behaving like a calm, established large cap cryptocurrency. It is behaving like a high beta speculative asset. That means support and resistance levels matter enormously. Around the recent structure, the 50-cent area has been identified as an important short-term support zone, while the mid 60 cents have acted as an important resistance region. Historical analysis has also highlighted roughly 40 cents as another potential support area if the lower range breaks. There is also another important level around the $0.57 area that recently became a key technical test. A move above approximately $0.62 was viewed as a potential confirmation of stronger bullish momentum. And this gives us an interesting battle. If Velvet can maintain higher lows, reclaim resistance with strong volume, and continue attracting genuine spot demand, the recent volatility could eventually develop into a larger bullish trend. But if price repeatedly fails around resistance and starts losing support, the market could quickly shift from buy the dip to sell the rally. That is where the sell signals become important. Velvet does not have the kind of mature analyst coverage you would see with Bitcoin, Ethereum, or major publicly traded companies. So there isn't a traditional Wall Street style analyst consensus that we can simply label strong buy, hold, or strong sell. Instead, traders have to rely much more heavily on market structure, momentum, volume, derivatives positioning, moving averages, and sentiment. And right now, those signals are mixed. The bullish side is obvious. Velvet is building an ambitious ecosystem around AI, DeFi, social trading, perpetual futures, cross chain trading, and automated strategies. The project's June update said training had begun on Velvet 1 and that autonomous AI strategies and cross chain trading were being developed and launched. But the bearish side is equally important. When a token makes huge percentage moves in a very short period, momentum indicators can become overheated. Traders who bought much lower have an incentive to take profits, while new traders may enter because they fear missing the next pump. That creates a classic problem. The people who bought early are looking for an exit. The people who bought late are looking for continuation. And if continuation doesn't happen, those late buyers can become the next wave of sellers. We also have to talk about derivatives. One recent report showed Velvet experiencing a major increase in derivatives activity, with open interest rising sharply alongside the price move. That can provide fuel for further upside, but it also increases liquidation risk if the market suddenly moves in the opposite direction. So is Velvet actually undervalued? This is where the debate gets interesting. The bullish argument says Velvet is still relatively early in its development. If its DeFi vision succeeds, if AI powered trading becomes a major crypto narrative, if Velvet's social trading ecosystem gains users, and if cross chain and global market functionality actually translates into meaningful adoption, then today's valuation could eventually look small compared with the potential size of the ecosystem. That is the bull case. But the bear case asks a completely different question. How much of that future growth is already priced into the token? A crypto project can have excellent technology, an exciting roadmap, and a strong narrative, while the token itself still becomes a poor trade if investors pay too much for expectations. And that is the value trap argument. A low price per token does not automatically mean a cryptocurrency is cheap. Velvet has a maximum supply of 1 billion tokens, while CoinGecko recently listed circulating supply at roughly 421 million. So traders need to think about market capitalization and future supply, not simply whether the token looks inexpensive because the price is below $1. This is one of the biggest mistakes retail traders make. They see a token trading below $1 and think, if this reaches $1, I could double my money. But price per token alone tells you almost nothing about whether an asset is undervalued. Market capitalization, circulating supply, dilution, adoption, liquidity, and actual demand are much more important. And Velvet has another major risk: volatility. This is not an asset where a 5 or 10% move should automatically surprise you. Recent trading history has demonstrated that Velvet can move dozens of percentage points in a short period. That creates opportunities, but it also creates the possibility of very fast losses. So let's look at the bull case. The best case scenario would be a controlled pullback followed by strong accumulation. Instead of collapsing after the recent surge, Velvet could establish a higher low, regain important resistance, and then attack the previous highs. If that happens with strong spot volume rather than just leveraged derivatives activity, the signal would be much healthier. The market would be saying that buyers are willing to support the project even after the initial excitement fades. And if Velvet continues delivering on its AI, DeFi, social trading, and cross-chain roadmap, that could provide the fundamental narrative needed for another sustained move. But now the bear case. If Velvet loses important support and buyers fail to step in, the market could revisit lower zones around the 0.50 area and potentially the 0.40 region. A breakdown through those areas would weaken the bullish structure and could turn a normal correction into a much deeper retracement. The biggest danger would be a combination of falling price, declining volume, and forced liquidations. That combination can create a feedback loop. Price falls, leverage positions get liquidated, liquidations create more selling pushes price lower, and suddenly a token that looked unstoppable just days earlier looks extremely weak. That is why retail traders need to be careful with Velvet after large pumps. The short-term outlook is therefore highly dependent on confirmation. If price holds support, momentum stabilizes, and resistance is reclaimed with convincing volume, the bulls have a reasonable argument. If price keeps getting rejected and begins making lower highs and lower lows, the bears regain control. For the long-term outlook, the question is much bigger than the chart. Can Velvet turn its DeFi vision into real usage? Can its AI infrastructure generate meaningful value? Can its social trading products attract and retain users? Can cross-chain trading and broader market access create sustainable activity? And most importantly, can that activity translate into lasting demand for the Velvet ecosystem? Those questions matter much more than a single green candle. Because right now, Velvet has something that many small cryptocurrencies desperately want: attention. But attention is not the same thing as adoption. A pump is not the same thing as a trend. And a low token price is not automatically undervaluation. So my overall view is that Velvet is one of the more interesting high-risk crypto setups to watch, but also one where chasing momentum could be extremely dangerous. The technology and roadmap create a legitimate bullish story, while the extreme volatility and derivatives activity create a serious bearish risk. In the short term, I would be watching the major support zones, the reaction around resistance, trading volume, and whether the next move is driven by genuine spot buying or leverage. In the long term, I would be watching development and adoption rather than hype. Because if Velvet continues building while the market eventually recognizes genuine usage, today's volatility could become a small chapter in a much larger story. But if the hype runs ahead of the fundamentals, that same volatility could turn Velvet into a painful value trap. And that leaves us with the biggest question of all. After these massive moves, is Velvet preparing for its next major breakout, or are late buyers about to discover that the real opportunity was already behind them? Remember, this is not financial advice. This video is for educational and informational purposes only. Always do your own research, understand your own risk tolerance, and never invest more than you can afford to lose.